Hello everyone, welcome to past paper discussion sessions for advanced taxation. In our today's class, we'll be starting discussion on June 2026 attempt past paper. Before going in detail of this past exam paper, let me give you an introduction about this series of sessions. In this series, we'll be discussing almost 7 attempt complete exam papers. And then I will be giving you 3 mock exams to attempt on your own and send me for checking and feedback. The practice of complete exam papers in last few days before the examination is really important because it gives you an idea that how you have to deal with all of the topics together in time restricted situation. What most of the students do is that they study particular topics and then they do topical practice only. But that's obviously very easy because that topic is fresh in your mind. But when you practice these complete exam papers in time restricted situation, which is the real exam situation, that's a big issue because you have to deal with all of the topics together coming up in mixed up form and you have a time restriction also. So these past exam paper discussion sessions will give you an idea about that. Along with the discussion of these past papers, I will also be using my summary notes, which are like life-saving summary notes in last month of the examination. I've summarized entire course of advanced taxation in just 57 pages. All the rules are written in it in a very good manner. You can refer any topic, like for example, if you have to search gift holdover relief, you will just search, you will write gift holdover and you will arrive at the relevant. Or maybe if you have to search corporation tax, you just go and write corporation tax and you arrive at the relevant rules relating to it. So we'll be using these summary notes during the discussion. We'll be discussing the complete exam paper and overall, it will be a great benefit to you guys. Before going in detail, if I give a brief introduction about myself, majority of you already know me. I'm Owais Mirchawala. I've been teaching this exam for more than 15 years. And I think I've taught around 10 to 12,000 students in this period for advanced taxation only. And 70 of my students have secured nationwide positions in this examination, which is obviously a great achievement. So now let's deep dive into this exam paper. You have to listen to me very carefully. What I'll be doing is I'll be doing a very detailed coverage. It will be a bit lengthy session. Normally in the examination for question number 1, you have like 1 hour and 40 minutes to complete it. We'll take around 2 hours. We'll take more 20 minutes extra during this discussion session because obviously I'll be explaining the things also. But the objective is that you understand that how you have to deal with all of the topics together, how you have to use summary notes and all. So listen to me carefully. Let's go in the detail. We'll first read the introduction. This introduction screen, we'll be looking at the exhibits. We'll discuss the requirements. And then most importantly, we will craft a complete answer in our today's class in this word processor document. So you will understand that how you have to use the response options, how you have to gain professional skill marks, how you have to approach the entire exam paper. So let's start with it. So it's question number 1, June 26 exam paper. Let's read it. You should assume that today's date is 1st of March 2026. You are an ACCA student working for a firm of accountants. Your manager has asked you to carry out some work in relation to Sylvie, her son Regi, and their family-owned company. See, this is normally an introduction of the question, like where the examiner introduces you about what topics he'll be asking and what role you are performing. Not a lot of value in this introduction, but obviously you have to read it in a fast-forward manner. Topul Ltd. Sylvie and Regi are both clients of the firm. Topul Ltd is a prospective client. In addition to some ethical considerations which have been raised by your manager, advice is required in respect of. If you remember, I have given you a complete document for the requirement of ethics. I'll refer it during the class discussion also when we'll be doing that requirement. Because in the examination, you have easy 5 marks relating to ethics. Okay. So in addition to the requirement of ethics, what are the additional things he has asked? Reliefs available and the capital gain tax and inheritance tax payable on a gift. Okay, there is some CGT and IHT implications for a gift. Then tax implications of involving a spouse in an unincorporated business, either as an employee or as a partner. We have looked at situations in topical discussion also, that if we hire someone as an employee or as a partner, what implications it will create. So it's doable, we'll be looking at it. Then whether an overseas company is a controlled foreign company for corporate tax purpose, and the effect of the investment in overseas company on corporate tax payment dates. Obviously, the detail of all of this will be explored when we'll be looking at these exhibits. The following exhibits available on the left-hand side of the screen provide information relevant to the question. Exhibit 1, Sylvie. Give to Regi a file note by manager. We'll read it. It's about something gift, which is obviously the requirement number 1. Then Regi, my unincorporated business. There is some email from Regi, which is relating to this requirement 2, this exhibit 2. Then Topul Limited corporate tax matter. Email from Topul Limited's finance director. And then exhibit 4 is the requirement, which is work to be carried out. As you all know, in question number 1, what examiner do is that he gives you the requirement in form of the exhibit. This requirement tab itself is just a formality. It just says that, okay, respond to the instructions, 40 marks. And 10 marks are for the professional skills, which include communication, analysis, evaluation, skepticism, and commercial acumen. What is communication? Presenting the answer in a proper format, like making a memorandum or email, whatever the examiner has asked you. Giving headings, presenting your answer in a proper manner, following the examiner instructions, that's communication. What is analysis? Analyzing the text rules, referring the text rules in a better manner in your answer. Evaluation, relating to the scenario, like talking on positive and negative sides, evaluating it from a complete manner. Skepticism, questioning anything, like if any data is missing or if any data is wrong, that indicates your skepticism. Commercial acumen, practical advice, not just an advice relating to rules, advice practically, commercial acumen, like whether it will be beneficial for the client in long term or not. So while answering, we'll be applying these professional skills. The examiner will evaluate your overall answer to check that whether you have answered it in professional manner or not. You will only attempt requirements of 40 marks. 10 marks are additional. It's a gift if you attempt your answer in a professional manner. Okay. See, your requirements are of 40 marks only. First requirement, 6 marks. Then 12 marks. So 6 plus 12, 18. Plus 9 marks. So 18 plus 9 is 27. Then plus 2, 31. Then plus 5, 36. And then I think 34. And then total 40 marks. So 6 plus 5, 11, 11 plus 2, 13, 13 plus 9 is 22, and then 22 plus 12 is 34, and then 6, 40 marks. So you will attempt requirement of 40 marks only. See, you will get 10 additional marks as a gift, free, if you attempt those 40 marks in a professional manner, like give proper headings, explain the rules in detail, relate to the scenario, like be a professional while answering it. See, basically ACCA is training you to deal with the real life situations. Because when in real life, okay, how much technically strong you are, but if you don't know professional communication, if you don't know commercial acumen, you will lose a client. Okay, so that's why examiner is giving you 10 extra marks to demonstrate your professional skills while answering the question. That's normal and it always happens in question number 1. You will understand these professional skills and applying them as we do these past paper discussion sessions and as we move forward. Okay, so let's look at exhibit number 1. Let's deep dive into the question. Exhibit 1, Sylvie. Gift to Regi. Extract from a file note by your manager dated 1st of March 2026. Background. Sylvie and her son, Regi, has always been UK resident. Sylvie is an additional rate taxpayer and has not previously made any lifetime gifts. So if someone has not made previous lifetime gifts, so this means that annual exemption is available in IHT. If you remember, £3,000 annual exemption of IHT. When someone is an additional rate taxpayer, so this means that anything additional you will earn for income tax purpose, it will fall at 45% rate. In CGT also, the smaller bands are not available. So when you read the question for the first time, read it with patience. Mistake number 1, students rush. They rush like, okay, they want answer very fast. No, just read with patience. Identify the data. Believe me, every question is easy. At least passing marks are very easy if you read that question in a proper manner, in a proper approach. Okay, so let's look at it. Gifts to Regi. Sylvie has two assets, one of which she intends to give to Regi on 1st July 26. Sylvie will either give him a vintage car or her entire shareholding of 4,000 shares in Topul Limited, an unquoted trading company. Okay. Now, if you think about it, okay, if I'm gifting anything, so it has CGT implications and it has IHT implications. Start using your mind. Yeah, your mind should be operational. Okay, car is a motor vehicle. Motor vehicle are exempt assets from CGT, if you remember. But in IHT, they are charged. If you give shareholding, there will be CGT and IHT, both of them. But maybe on gifting a shareholding, there may be situation of like business property relief, maybe gift holdover relief. Because whenever shareholding and gift gets involved, your mind should get operational. Okay. Vintage car. The vintage car will be valued at £450,000 on 1st July 26. Sylvie bought the car for 400,000 in August 2012. So wait a minute, I have a question. So your mind is very fast, it can pick up points so fast. How can I do? See, I'm a teacher, I've been dealing with this subject for 15 years. You are giving the exam for the first time. Don't expect to become Owais Mirchawala in your examination. You are a normal average student. It's okay to forget some rules. Don't be a perfectionist. Read the question with patience. Use the summary notes daily for the revision. And with passage of time, your mind will get settled down. You will understand the rules in better manner. Okay. The problem starts when you want to become a perfectionist. That, okay, I should be perfect in my answer. That's the biggest mistake. Don't do that. Okay. So, okay, there is an option where he is planning to give this car to his son Regi. Okay. Regi is our son. Or another option is that shares in Topul Limited are. Sylvie has owned 4,000 shares in Topul Limited since January 15, when she bought them for £16,000. She is not a director or employee of Topul Limited. The shares in Topul Limited are owned as follows. Sylvie owns 4,000 shares. Sylvie's husband Terry owns 2,000 shares. Now, if you remember IHT inheritance tax, there was concept of related party holding. That if your related party, which refers to exempt parties, if they also have the shareholding, we consider the impact of their shareholdings while valuing our holdings. I'll repeat my statement. If our related party means exempt party in IHT, which includes spouse, charity or national institutions. If your related party has any holdings, so while valuing your shareholdings, you will take impact of your related party holdings also. We'll consider it while we'll be solving it. Then Lawrence, his brother, owns 4,000 shares, so total shares are 10,000. The value per share of different shareholdings on 1st July 26 will be less than 25% share, each share worth £40. 25% to 50% shareholding, each share worth £70. 51% to 74%, each share worth £130. And if it's 75% or more shareholding, each share worth £190. Because greater the shareholding is, each share is more powerful. Details of Topul Limited. Sylvie introduced me to Lee, the finance director of Topul Limited, who provided information about the company. From this, I have confirmed that Topul Limited is a trading company. However, the company owns assets which are not being used in the business and are not required for future use, which we refer as non-business assets or what we call as accepted assets. On non-business assets, we don't get business property relief or gift holdover relief because they are non-business assets. Such assets make up 9% of the company's total assets and 13% of the company's chargeable assets. Topul Limited has a new investment in a company, Vents Company, for which Lee has provided details in Exhibit 3. We'll read about it. But I've already taken account of this investment when calculating these percentages. Okay, so we read about Vents Company in Exhibit number 3. So here in Exhibit number 1, he gave us detail about Sylvie's gift to Regi. Now, if you look at this question is designed in a very segregated manner. This exhibit is in relation to gift. Second exhibit is in relation to his business. Third exhibit is in relation to Topul Limited. Like each exhibit is segregated. Now, shall we read the entire question first, or we read an exhibit and do a requirement? See, there is no fixed answer for this question. It completely depends on the type of question you are getting. If you look at this question, it's very much segregated. Like it's a gift, exhibit 1. Exhibit 2 is about his business. Exhibit 3 is about a company, Topul Limited. Now, if I just go and refer the requirements, like how the requirements have been designed. Requirement number 1 is in relation to tax relief available on gift of shares, tax payable on gift of car or shares. So I can feel that these requirements are clearly related to exhibit number 1. Then if I move forward, requirement B is clearly related to exhibit number 2. He himself referred that. And then requirement C is in relation to that exhibit 3. So whenever you read an exhibit, you go and look at the requirement tab also. That, okay, can I solve it at this level, or shall I read the complete question? Sir, if I read the complete question in the one go, what's the problem in it? There is no problem, but what happens is that when you read the complete question, there is a lot of data and you start forgetting things. So then again, you have to go and revisit it. That consumes your examination time. So if in the examination, the paper is designed in such a way that exhibits are segregated, okay, fair enough. Read an exhibit, solve the requirement related to it. It will save your more time. Okay. So, but there are some questions in which the story is continuing. Sir, how will I know? Like you are doing these past exam paper series, you will understand it. You will automatically identify that, okay, in this question, this complete debate is going on. Like for example, if in this exhibit number 1, he wouldn't have given us these valuation of shares, and these valuation would have been given in exhibit 2. So then I have to read it in continuity. Okay. But this question is like that, okay, exhibit 2 is completely different. It is about running the business and then involving Sam in the business, and it's a completely different thing. Okay. So let's refer exhibit number 4, which is work to be carried out, and let's solve the requirement relating to exhibit 1. Extract from email from the manager dated 1st March 26. Please carry out the following work. Requirement A memorandum regarding gift by Sylvie. Exhibit 1. Write a memorandum for Sylvie's client files, which I can use when advising her at our next meeting. For this work, you should assume that Sylvie will die in August 2031. And that this will be before her husband Terry dies. Okay. The memorandum should cover the following matters. Tax relief available on gift of shares. Now from here you have to concentrate very much, because now this is the requirement. You have to read that, okay, what he's asking. In relation to potential gift of shares in Topul Limited, restricted to gift of shares only. Explain why gift holdover relief and business property relief should be available, stating any assumptions you have made, and explain why each relief will be restricted. So in relation to gift of the shares, I have to discuss that why gift holdover relief and business property relief may be available, and I have to discuss the assumptions. So if I start thinking about gift holdover relief, please listen to me carefully. If I start thinking about gift holdover relief, see, they are UK resident. It's a situation of the gift. Okay, so when these requirements start to get satisfied, the gift holdover relief start to become available. But wait a minute, if you don't remember the rules, what you have to do? Currently, you are not in the examination. Just go in the summary notes. Write gift holdover relief. And here you go. You have all the rules in front of you. Okay. Donor and donee are UK resident. Transaction is one of the following. It's a gift of unquoted company shares. And if it would be quoted company shares, the donor should have 5% shareholding. If I just go and refer it, if I look at Topul Limited, so Topul Limited is obviously not a quoted company because it's owned by these three people. Just look at it, Topul Limited, Sylvie, Terry, Sylvie's husband, and Lawrence. So it's obviously an unquoted company. Okay, you are provided with the details about Topul Limited also. Topul Limited is a UK resident trading company. Okay, and obviously it's unquoted because it is owned by three individuals only. Okay, so when it's a company and it's an unquoted company, gift holdover relief is available. Donor and donee are UK resident. Okay, it's an unquoted company. So yes, gift holdover relief will be available. Are you getting my point? But for gift holdover relief, it is required that donor and donee make a joint election. So there is no detail given that whether they have made a joint election or not. For gift holdover relief, it is necessary that donor and donee both make a joint election, like they say that, okay, we want to claim gift holdover relief. Otherwise, this relief won't be available. This need to be opted, this need to be elected. So that is what we are assuming. Otherwise, the conditions are satisfied that, okay, they are UK resident and it is unquoted company shares on which the gift holdover relief is available. But what will restrict this relief? What will restrict this relief is that it is available on chargeable business assets only. It is not available on non-business asset portion. It is not available on non-business asset. So if you go and look at it, this company has accepted assets which are 13% of the chargeable assets. So on 13% value, gift holdover relief will not be available. It will be available on 87% portion only. It will be available on 87% portion only. So explain why gift holdover relief available. Any assumption you are making. Explain why each relief will be restricted. Similarly, if I talk about business property relief, inheritance tax. So yes, business property relief will be available. Why business property relief will be available? Just go to the summary notes, refer its requirements, see in the examination it won't be available. Currently, it's available to you. It's 100% if unquoted company, 100% if unquoted company shares. Okay, you need 2 years shareholding requirement. So is there 2 year shareholding requirement satisfied on it? So when Sylvie is acquired, she has acquired it in January 2015. And she is gifting it on 1st July 2026. So yes, business property relief will be available. 2 year ownership requirement is satisfied. But again, business property relief is also restricted if there are accepted assets in the company. It is not available on non-business assets. In BPR, it's not chargeable assets. Chargeable asset is a concept of CGT. BPR looks at total value of the asset. So from total value of the asset, 9% is non-business. So what is the difference between total assets and chargeable assets? Chargeable assets means on which CGT will apply, because CGT is exempted on some assets, like it's exempted on motor vehicle, CGT is exempted on cash, CGT is exempted on inventory, CGT is exempted on receivables. So in CGT, we look at the chargeable assets of the business. So from chargeable assets, 13% were non-business, which were not required for the business. In IST, we look at the total assets. So total assets, from that 9% was non-business. Okay. So let's draft the answer in relation to it. Okay. Let's draft the answer. The question is Sylvie and Regi. Okay. This is the question name if I'm not wrong. Sylvie and Regi, you can write that also, or Sylvie and Topul Limited, whatever you like, you can draft. Okay, there is no marks deduction if you like write the wrong name of the question, because that's just to refer the question. Okay, just referring the Excel. Yes. Now we are dealing with requirement number 1, and in this requirement we have to develop memorandum to client files. Okay, sir, how do you know that we have to develop memorandum to client files? See, in this requirement, he told you, write a memorandum for Sylvie's client files. Okay, and I'm dealing with requirement number A. So what you can do is you can copy this requirement and paste there also. Okay, so we are dealing with requirement part A, which is memorandum regarding gift by Sylvie. Okay, so this is my requirement, and now I'm preparing memorandum to client files. So in 2, I will write client files. From who are you? See, you were written this thing by your manager. So you will be considered as a tax supervisor or as a tax senior. Okay, please don't write your name. You are a tax supervisor or a tax senior. What is the date? Don't write the date of today. Pick up the date from the question. So date is 1st March 2026. Who is the client? So here the client is Sylvie. Okay. And what is the subject? What it is relating to? Okay. So it is gift by Sylvie to Regi. This is our requirement. See, when you are doing the question in the examination, it's very important that you have practiced it so much that you don't waste your time in these things. Listen to my words carefully. This is what Sir Suman used to say in SBL when we teach SBL together. He said that your muscle memory, your muscles, your brain should be so much trained that you just do it in one go. Like, okay, memorandum for client files, you know the sequence: to, from, date, client, and subject. One important thing. Don't think too much that, okay, sir, if date comes first or client comes first. No, there is no issue. To the client files from tax supervisor, you write date first or you write client name first. There is no issue in it. The examiner will not deduct marks for that. So be relaxed. Okay. So we are preparing memorandum to the client files, and this is the basic format which we follow. Now we have to deal with part 1, and this is tax reliefs on gift of shares. So I will copy it from here. Tax relief on gift of shares. Sometime in the examination, this copy paste function don't work. So then you just have to type it. Don't get stressed out that, sir, it's not working. What shall I do? No worries. It's not working. No worries. You will just type it. Okay. Now, and this bold, underline, this all is not mandatory. I just do it to make it more presentable. If you have time, do it. Otherwise, there is no issue with it. Now, what is the question? The question is, in relation to the potential gift of shares in Topul Limited on 1st July 26, explain why gift holdover relief and business property relief should be available. So first we will talk about gift holdover relief. So let's talk about that. Okay. Gift holdover relief will be available on gift of shares of Topul Limited by Sylvie to Regi as it satisfies following conditions. Okay. Number 1, donor and donee. Donor Sylvie and donee Regi. Both are UK resident. Okay. If Topul Limited is an unquoted company, then gift holdover relief will be available without shareholding requirement. See, it is an unquoted company, we know, because there are 3 shareholders. And if it is a quoted company, then also it will be available as Sylvie owns more than 5% shares in Topul Limited. Okay. If someone would have just commented on a situation of unquoted company, that would also be okay. There won't be any issue in it. Okay, but if someone covers both quoted and unquoted situation, that is also acceptable. Are you getting my point? Okay, because I think there is, oh yes, it's written here that it's an unquoted trading company. It's very much clear. So now it's just very much clear. You just need to refer about unquoted company situation. Okay, or you can rephrase it as Topul Limited is an unquoted company. Therefore, gift holdover relief is available without shareholding percentage requirement. That's very much simple because the question stated it. Okay. It is assumed that donor and donee both will make election of gift holdover relief to be available. Because the question said that why it is available, what assumption you are making, and what is the restriction. Gift holdover relief will be restricted as Topul Limited owns some non-business assets. Okay, gift holdover relief will be available on chargeable business assets portion only. Okay, it will be available on 87% of the gain on gift of shares as 13% of chargeable assets are non-business. See, I'm just answering it in a very relaxed manner. Like no specific format. Just be relaxed and answer it. Students message me that, sir, is there a writing approach? Write one line, two lines, start. No, just answer it. Be very clear in answering it, relaxed. Why gift holdover relief? It will be available because donor and donee are UK resident and it's an unquoted company. What assumption you are making and why it will be restricted. Then business property relief. Okay. Business property relief will be available on gift of shares by Sylvie to Regi as Sylvie has owned shares for more than 2 years and shares are of unquoted company in which no shareholding percentage requirement exists. Okay, so there is 2-year ownership, yes, and there is no shareholding percentage requirement. Shares of Topul Limited were purchased in, when it was purchased, were purchased on 1st July 20, were purchased in January 15 and they are gifted on 1st July 26, so it's more than 2 years. Were purchased in January 15, in January 2015, and they are being gifted in July 2026. Therefore, 2 years ownership requirement is satisfied. Okay, what assumption are you making? Think about BPR. Okay, there is 2-year ownership, it's unquoted company. So is there any assumption? Yes. In order for BPR to remain intact, it is necessary that donee do not sell that thing before the death of donor. Or if he sells it, he will reinvest in the qualifying assets. Okay. It is assumed that donee, who is Regi, will not dispose these shares before death of Sylvie. And if he disposes, he will reinvest in qualifying business before death of Sylvie. Otherwise, BPR will get withdrawn. So this is the possible assumption. How it will get restricted? BPR may get restricted due to non-business assets of Topul Limited, as it is not available on accepted assets portion. Done. BPR will be available on 91% of value of transfer, as 9% of total assets are accepted assets. Done. So if you just look at it, we are done with 6 marks in such an easy and relaxed manner. See, this is what I always say to my students. Confidence is most important. Relax. Do it in a relaxed manner and it will just go in a flow. Just look at it. No, nothing special. I haven't done anything special in it. I just solve it in a normal manner. What he asked why it will be available, any assumption and any restriction. So why it will be available? Refer the conditions, assumption and any restriction. So if I am not able to remember anything, what will happen? Instead of 6 marks, you will get 5 or maybe 4. But you need only 3 to pass the exam. So be relaxed, don't take stress. Okay, the key in the examination is to solve it in a relaxed manner. When you look for perfection, that point you start making the mistake. Let's move forward. Part 2. Tax payable on gift of car or shares. So let's paste it here. Okay. Sir, how do you paste it? Control V. Okay, Control V, I paste it. But as I said, sometimes in the examination, copy paste function is not working. So please don't worry in that case. Now, for this part, you should assume that gift holdover relief and business property relief will apply. Although restricted on gift of shares. Restricted means not available on that non-business portion. For each part of the following option, option 1, Sylvie gives the car to Regi. Option 2, Sylvie gives shares to Regi. Calculate the capital gain tax payable on the gift and inheritance tax payable on the gift. So CGT and IHT implication. And recommend which option will result in lower amount of total tax. Okay, no issue. What is first option? First option is Sylvie gives the car to Regi on 1st July 26. This is the first option. Here you go, your first option. What I have to do? Capital gain tax and IHT. Okay, let's look at it. Capital gain tax implication. On gift of car, there will be no CGT implication, as motor vehicles are exempt from CGT. Done. On gift of car, there will be no CGT. If you remember the exempt assets of CGT, if I write motor vehicle or car in the exempt assets, you will find exempt assets. Because word exempt is used a lot of times, so we need to search it. It would be available in capital gain tax. Okay, just a second, here we go. And we are searching the word exempt. Just I want to show you the list of exempt assets, where it is. Yeah, exempt assets from CGT. So vehicles, motor vehicles are exempt assets from CGT. Okay, so you can use these summary notes to refer a lot of. So there won't be any CGT implication. Now, as far as inheritance tax implications are concerned, let's look at it. From IHT perspective, gift of car by Sylvie to Regi will be considered as a potentially exempt transfer, as it is a lifetime gift made by an individual to another individual. Okay, so it will be a potentially exempt transfer. We have to calculate IHT on it. Very basic working. I believe even a student at skills module taxation can do it. Okay, so let's do it now. If you want, you can do these workings in spreadsheet also. That's completely acceptable. If you are doing it in spreadsheet, you will just write refer working in spreadsheet. I am more comfortable on solving the entire answer on a single screen, so I follow that. But it's completely up to you. There is no pressure. The examiner gives you that liberty. Okay. So I'm solving it on word processor by using this table function because I'm more comfortable in solving entire answer on a single screen. Okay. So gift of car on 1st July 2026. So it is tax year of 26-27. Okay. Value of transfer. What is the value of the car? Here is the value of car. It's for £50,000. I will copy the pound sign. If you don't have time, you can skip this pound sign also. Okay. You can pick up pound sign from this symbol also. Okay. So I've copied it once, and every time I have to paste, I will press Ctrl V. The value of the car is for 50,000. Annual exemption. Current year, it is 26-27, £3,000. The question stated that Sylvie has not made any other gifts. So this means that annual exemptions are available. If you remember, we read it here. Has not made any previous lifetime gifts. So annual exemptions are available. Okay. So here you go, this annual exemption 3,000. This gives us potentially exempt transfer. So this will be for £44,000. If I'm not wrong, just to verify the value of the car, it's for £50,000. Okay. Now, no lifetime tax on PAT. Okay. However, Sylvie will die, or I would say is assumed to die on what date? It was written in the question. It was written here. It's assumed that she will die on August 31. So I think July 26 to August 31, it's within 7 years. So as Sylvie is assumed to die on 1st August 2031, which is within 7 years of the gift, therefore death tax will arise on this gift. Okay, as she is assumed to die within 7 years, so death tax will arise. So death tax August 2031. This is the death date. So you just need to move forward and solve it. So one more important thing, how you add the row at the end. I press the tab key on my keyboard. When I press the tab key on the last cell, it adds a new row. Okay. So PAT of 1st July 2026, it was 444,000 on which I am calculating the death tax. Okay. Death year nil rate VAT is £325,000. Whole NRB is available as no other gift is made by Sylvie. Okay. So chargeable amount is how much? 444 minus 325. So 119,000. So my death tax will be 119,000 into 40%. See, I believe like this is very much simple, which I'm doing. Into 0.4, 40% tax. So it's 47,600. You will get taper relief. Why? Taper relief will be available as gap between gift date of 1st July 2026 and death date of 1st August 2026. Oh, sorry, 31 is more than 3 years. Sir, will you read the things? Yes, I will repeat. See, this is very basic working which I'm doing. Okay, like calculation of IHT, you have studied it a lot of time in your course. Okay, but still, if you look at it, from CGT implication, gift of motor vehicle was an exempt asset. From IHT, when you gift an asset, it's a PAT. Okay, when you gift an asset during life, it's a PAT. Value of transfer. In IHT, you directly use the market value. You deduct annual exemptions, you get the value of PAT. Now, as debt is within 7 years, July 26 and August 26, 31. July 26 and August 31, it's within 7 years. 27, 28, 29, 2030 and 2031, it's 5 years. So it's more than within 7 years, so debt tax will arise. But taper relief will be available. So the PAT value was 444. Nil rate band was available because there was no other transfers. This is your chargeable amount. Now taper relief will be available as gap is more than 3 years. How much will be the taper relief? Taper relief will be how much? It will be 60%. Why? As gap between gift date and death date is more than 5 years but less than 6 years. 1st July 26 to 1st July 27, 1st July 28, 1st July 29, 1st July 2030 and 1st July 2031. 5 to 6 years taper relief is 60%. Okay. This taper relief will be available in text tables also. It will be given in your examination. By the ways, you can go in the bottom in the text tables. Okay, I think the screen didn't load. Let's reopen it. Yes, here you go, text tables. You scroll down and you go to inheritance tax. So between 5 to 6 years, the taper relief is 60%. Okay, so taper relief will be 60%. So 47,600 into 60% of the tax will be waived. So that will be 28,560. So my tax payable will be how much? It will be 19,040. So this is the total tax which will arise if we talk about the situation of gifting the car to Regi. From CGT perspective, it's exempt. From IHT perspective, it's a PAT. I believe like till now, this question is like a piece of cake, a very easy one. Okay. Now let's move forward. What he's asking. Now option number 2 is Sylvie gives the shares to Regi. This was the first option we did of giving car. Now we are looking at option 2. If she gives shares. Now again, capital gain tax implication and then inheritance tax implication. So from CGT perspective, if I look at C, in the car also I did the same thing. Now I am doing for shares. Okay. How many shares she's gifting? She's gifting 4,000 shares. So from capital gain tax, you will just pick up the market value of these 4,000 shares. See, now one important thing to understand. The concept of related party shareholding is of IHT, where you take impact of related party shareholding in valuation. This is a mistake which a student can do. CGT just looks at the market value. In IHT, we take impact of your related party shareholding also. But in CGT, there is no such requirement. Okay. Now what will happen? You will calculate the capital gain tax implications. Disposal proceed is equal to market value. Okay. 4,000 shares are being gifted. What is the market value of 4,000 shares? So obviously 4,000 shares is a situation of 25% to 50%. Because 4,000 shares is 40% shareholding in total. Sylvie has 40% shareholding. It lies in this bracket. So each share worth £70. Okay. Each share worth £70. Okay. Valuation of 4,000 shares will be based on 40% shareholding of Topul Limited. Okay. So 4,000 shares into 70 pounds, it's 280,000 pounds less the cost. See, in capital gain tax, this is how things work. Now, what is the cost of the shares? She purchased these shares for 16,000 pounds. Okay, fair enough. Less the cost, 16,000 pounds. So that gives me the chargeable gain. 280 minus 16,000, so it's 264,000. Then comes gift holdover relief on chargeable business asset portion, 264,000 into 87%. We already commented on it because 13% of the assets were non-business. So gift holdover relief was available on 87% portion only. So 264,000 into 87%, it's 229,680. Okay, that gives me chargeable now. How much it is? So it's 34320. You will deduct annual exemption of CGT. In CGT also annual exemption is 3,000. In CGT there is no previous year exemption. There is only current year only. See, these are the areas where students get confused. There is a high potential that they make mistake. So this is 31320. You will calculate the capital gain tax. What will be your CGT? 31320 into 24%. Why 24%? Because Sylvie is an additional rate taxpayer, if you remember. See, remembering these small things, this is very important. Okay, remembering these small rules, this is the most important thing, because at the end of the day, ATX is all about remembering the rules. Sir, how we will remember the rules? By practicing, by using the summary notes, by revising them regularly. Okay, just a second. The screen started to misbehave. So 31320 into 24%, this is 7517. Sir, will you repeat it again? Yes, I will repeat. I will repeat. It's my hobby to repeat. It's very important that you understand the things well. Otherwise, it will get problem for you. And see, I always say that understanding of the topics is a completely different thing, whereas practicing the exam papers in time restricted situation and dealing with all of the topics together, that's very important, because that's the point where you get a real evaluation that whether you will be able to do your exam or not. Okay. So gift of shares, disposal proceed is equal to market value. Less the cost, you get the chargeable gain. Okay, less the cost, you get the chargeable gain. Now gift holdover relief was available on 87% portion only. Why on 87% portion only? The reason being was that rest of the assets were non-business assets. Okay, rest of the assets in the company were non-business assets. So on the chargeable business asset portion only, you get the gift holdover relief. Then annual exemption, you got the taxable gain and you did your CGT. Okay, so what about inheritance tax implication? Okay, let's look at it. It's also easy. It's just about following the process. Now in IST, you look at value of transfer. But in IST, the point is that you have to look at related party shareholding. If you don't remember the rules, just go to the summary notes, refer related party holdings. If related party, that is exempt party, also holds same asset, then donor's wealth will be valued after taking impact of related party holding. This is very important. Okay. So I will write note 1 in relation to it. Okay. You can write in the table also. That's completely your choice. There is no stress on this. Okay. In IHT, gift of complete shareholding of 4,000 shares by Sylvie to Regi will be valued after taking impact of shareholding of Sylvie's husband shareholding in same company, Topul Ltd. In order to value your shareholding, impact of your related party holding is also considered. Sylvie's husband, Kenny, owns 2000 shares. So now your 4000 shares are 40%. But if I take impact of your related party, this becomes 6000 shares, which is 60% shareholding. And at 60% shareholding, each share worth £130. In IHT, gift of complete shareholding of 4000 shares by Sylvie to Regi will be valued after taking impact of shareholding of Sylvie's husband in same company, Topul Ltd. Okay, Sylvie owned 4000 shares and husband and her husband owned 2000 shares, which brings shareholding percentage to 60%. At 60% shareholding, each share in Topul Limited worth £130. See, this was the mistake which a student can do. Why? Because in CGT, you only looked at your shareholding. But in IHT, you have to consider impact of your related party ownership. That's important thing where a student can make a mistake. So shares are 4000 shares, but they will be valued at £130 each. Okay. So 4000 shares into £130. So it's £520,000. Now comes business property relief. Okay, we have already discussed that on gift of shares, business property relief will be available, and it will be available on business assets portion only. On unquoted company shares, it's 100%, and business assets portion is 91%. If you remember, we already commented that 9% of the assets are accepted assets, and the BPR percentage on unquoted company shares is 100%. So 100% refers to the BPR percentage and 91% refers to the business asset portion. Okay. So how much will be my business property relief? £520,000 into 91%. So it's 473,200 pounds. Okay. So now what is my value of transfer after BPR? So minus £520,000. So it's 46,800 pounds. Now I will deduct annual exemption. Okay. Now in annual exemption, some students may make a mistake. So let me explain that. See, some students will make a mistake that they will say that, sir, annual exemption is already used in CGT. See, the point to remember is that CGT is separate and IHT is separate. So don't mix them. The annual exemption of IHT is separate. Second thing, some students will say that, sir, annual exemption is already used against gift of car. But see, these are two options. Option one is gift of car. Either that will be done or another option of gifting these shares will be done. Both are not done together. These are two options. So if we are talking about gift of shares, then in that case also the annual exemption may be available current year and annual exemption of previous year 2025-26. So here I go, £3,000. So this gives me potentially exempt transfer. So 46 minus 6,000, so it's 40,800 pounds. No lifetime tax on PAT, on potentially exempt transfer. However, as Sylvie is assumed to die on 1st August 2031, which is within 7 years of lifetime gift of 1st July 2026, therefore death tax will arise. So the same statement which we used while discussing about gift of car. Okay, I will repeat the things again, so there is nothing to worry about. You just need to listen to me carefully. Okay, sir, how do you add the row? I press tab button while standing at the last cell. Okay, these all formattings, if you do, it's good. Otherwise, it's not mandatory. So death on 1st August 2031. So this is the part of July 26, which will become chargeable, and it's 40,800. But it will be covered by nil rate band, 325,000. Whole NRB is available as Sylvie has made no other lifetime gifts. Okay. See, basically in this situation, we are saying that either the car is being gifted or shares are being gifted. So if the car was gifted, then also whole NRB was available. And if shares are gifting, then in that case also whole NRB is available. Because both are not being gifted together. So the taxable amount or chargeable amount will be £0 because it will be covered entirely by nil rate band. So IHT on gift of shares will be £0 as it will be covered by the nil rate band. So if I look at it, first I did working for gift of car. In CGT it was exempt. In IHT we did the working of PAT. Then gift of shares, we did the working of CGT, gift holdover relief, and then we did working of IHT. Now he has asked that we have to give a recommendation that which option will result in lower amount of tax. So let's give the recommendation also. Okay. If car is being gifted, then total tax will be how much? Then total tax will be, in case of car, there was no CGT, but in case of gift of car, IHT was 19,040. If car was gifted, then total IHT will be £0 in CGT and 19040 pounds in IHT, which was 1904 pounds. If shares will be gifted, then total tax will be how much? In CGT, the tax is 7517 and IHT is 0. 7517 plus £0. So this is 7517. So gift of shares will result in lower total tax. Therefore, it is beneficial for Sylvie to gift shares to Regi. It's done. It's done. I will again say that I don't see any reason that a student can say that, sir, it's difficult. It's like just a very routine requirement as we have studied them. Like if you look at it, first requirement, commentary on gift holdover relief and BPR. Second requirement, evaluation of CGT and IHT implications. If we gift a car or if we gift shares. So talked about CGT, we talked about IHT implications, simple pat working. Then gift of shares, gift holdover relief concept and IHT BPR concept. If you want, you can do these workings in spreadsheet. It's completely up to you. It's completely okay. You can do them in spreadsheet. You can use formulas also. Like you can plus minus is equal to this. You can link them. But I'm more comfortable in solving the entire question on single screen because I think that it's more easy and it's more present. But otherwise, it's completely okay. There is no extra marks or deduction in marks. It's completely okay and it's up to you. So if you look at it, I believe that this was an easy one. No issue in it. Now let's move forward. Now comes requirement B, which is in relation to schedule regarding Regi involving SEM in the business. So let's copy this requirement. Let's paste it here. And now let's start discussing about it. But for this, we need to read exhibit number 2. So first we will read exhibit number 2 and then we'll go in detail of this answer. So let's look at exhibit 2. I want you all to listen to me carefully. Till now we have covered 18 marks. Okay, now let's look at it. Okay, so let's read this exhibit 2. Extract from an email from Regi dated 1st March 2026. I currently run a business as a sole trader and I want to involve my wife Sam in the business from 6th of April 2026, the start of my next period of account. I will either employ Sam or Sam and I will form a partnership together. So basically, it's a situation when we are evaluating that either we should hire an employee or we should make that person as a partner of the business. Okay, so let's read it. If I were to employ Sam, I would pay her an annual gross salary of £40,000. This is the current market salary for the work which Sam will do in the business. Now, if he will hire Sam as an employee, then in that case, income tax implication, class 1 employee NIC, class 1 employer NIC, these implications become relevant. Okay. Another situation is that if Sam were to join the business as a partner, her profit share would be 1/3. Now, in case of hiring as a partner, then in that case, you all know that implications of class 4 NIC become relevant instead of employment NICs. Please note the following. I make an annual trading profit of £120,000 from my business and do not currently employ any staff. Sam and I will have no other income in the tax year 2026-27. Okay, so he has given detail about a situation where Regi is planning to bring her wife Sam into the business, either as an employee or as a partner situation. So we have read the exhibit number 2. Now let's read the requirement that what the examiner is asking in relation to. Prepare a schedule I can use in a meeting with Regi in which you complete the following tasks. You should assume that taxable trading profit of the business before taking account of the cost of Sam's involvement will continue to be £120,000 per annum. And that Sam's involvement in the business will start on 6th April 2026. So before Sam's situation, the profit is 120. So if we hire as an employee, then in that case, salary will be adjusted and the trading profit will decline. Or if we hire as a partner, then in that case, 1/3 of the profits will be given. Overall tax saving part 1. Regi's total tax liability without involving Sam in the business would have been £43089. I can confirm that this figure is correct and does not need to be recalculated. So he has given us the original profits of 120,000 and the total tax in before hiring Sam situation. Calculate the overall tax saving for the couple, Regi and Sam, in the tax year 26-27 in each of the following two circumstances. If Regi employs Sam, paying her an annual gross salary of £40,000. Or if Regi and Sam becomes a partner sharing profits in 2/3 to Regi and 1/3 to Sam. How many marks? It's a 9 marks requirement. So in the question, he has given us the data where what we are given with the profits before the Sam situation and the tax also before the Sam situation. Now, if we hire Sam as an employee or if we hire Sam as a partner, what will be the impact on the total tax situation of the couple? That is our requirement. Now, what we have to do is we have to deal with a schedule like a working regarding Regi involving Sam into the business. Now, we don't have to prepare a memorandum or notes to the meeting. It's just a schedule. Schedule means the working. Okay. And in this part, the first part is that we have to do the overall tax savings. So let's look at it. I want you all to listen to me carefully as I do it. We are dealing with part B1. Okay. And in this part B1, situation number 1 is if Regi employs Sam. This is the first situation. And another situation is that if we hire her as a partner. Okay. So I want you all to listen to me carefully. I have already told you that in the examination, there is a possibility that this copy paste function is not working. And if that happens, you don't have to worry. You have to be relaxed. In that case, you will simply type it. Okay. So if Regi employs Sam, then what will be the overall reduction in the tax? See, the entire focus is to calculate the overall tax saving. Okay. So I will create a table. You can, instead of table, you can also use an Excel also. Okay. Total tax before hiring Sam. So what was the total tax liability before hiring Sam? It was given in the question. If you go and look at it, It is 43089 pounds. Okay, it is given in the scenario. So that I will pick up from the question, 43089 pounds. Okay. This was provided where? It was provided in the document extract from an email from Regi. Okay. Provided in email from Regi. See, now we have to calculate the overall tax saving, which in simple terms means that how much the tax will reduce when we are hiring the SAM. So we are provided with the total tax in the current situation. Now we have to calculate the revised tax situation. Revised tax if SAM is higher. Now listen to me carefully while I'm developing the answer. I'll repeat the things also, but you need to listen to me carefully. Revised tax if SAM is higher. Income tax of Regi. How much will be the income tax of Regi? How much will be the class 4 NIC of Regi? How much will be class 1 employer NIC of Regi? See what we are doing. We have to calculate that due to hiring SAM, how much tax is reducing. So whenever we have to calculate the reduction in anything, what we do? We pick up the before situation and we calculate the after situation. Now total tax before hiring SAM is given in the question, that is 43089. Okay. Now what will be the revised tax if SAM is high? So we need to work out the income tax that we will do in working 1. We need to work out the class 4 NIC of Regi. Because when you will hire SAM, your trading profit will get revised. And when my trading profit will get revised, automatically my income tax and class 4 NIC will change. When I will hire an employee, there will be class 1 employer NIC also. Okay. And then there will be income tax on SAM also, because SAM will start receiving the salary. So there will be working on that. And there will be class 1 employee NIC also on SAM. So these are the workings which we have to do. And then we will get reduction in total tax if SAM is hired as an employee. Sir, can you repeat it again? Yes, I will repeat, but it's very important that you listen to me carefully. We have to make a schedule regarding Regi involving SAM in the business. Now, there are two situations. Either we involve SAM as an employee. Now, our total tax before hiring SAM, this is 43089, that's given in the question. Okay. Now, what will be the revised taxation? Now, we have to talk about the couple as a whole. We have to talk about the couple as a whole. That's very important. Because the requirement specifically said that how much will be the overall tax saving for the couple, which means Regi and SAM both. So total tax before hiring SAM was 43089. What will be revised tax if SAM is higher? There will be income tax of Regi, there will be class 4 NIC, there will be class 1 employer NIC, there will be income tax on SAM, there will be class 1 employee NIC. So before hiring SAM, the total tax of the couple was 43089. After hiring SAM, what will be the total taxation of the couple? Okay. Now, before hiring SAM, SAM had no other income. SAM and I will have no other incomes. So this means that only income which SAM will receive will be 40,000 pounds as a gross salary. Okay. Now let's look at it. When you will look at the things carefully, you will understand in much better manner. Okay. If Regi will hire SAM as an employee, then trading profits will reduce as salary of SAM will become an allowed expense from trading P&L. This will result in revised income tax and class 4 NIC. That's very much logical. When you hire an employee, your trading profit will change, and when your trading profit will change, your income tax and class 4 NIC will get revised. I hope you are getting it, you are understanding the point. Now, how much will be the income tax? Okay, if I look at it, my trading profit before hiring SAM, that was given in the question, that My trading profit before hiring Sam was 120,000 pounds. Okay, so I will copy the pound sign. Here I go. My profit before hiring Sam was 120,000 pounds. Salary of Sam, which will become an allowed expense of 40,000 pounds. Okay. Now, along with the salary, if we pay any class 1 employer NIC, that also becomes an allowed expense. If you pay any class 1 employer NIC, that also becomes an allowed expense. And then you will get revised trading profit of Regi's business. Okay. See, when you are doing questions like this, it's about involving yourself in the scenario because there are technical concepts involved in it, like calculating NIC, calculating tax. It's very easy. But dealing with the data and presenting it in an easy manner, that's the most important. Now you have to calculate class 1 employer NIC. Okay. Now the rates are given in the text table for NICs. You will go in the text tables. I'm using these text tables because so that you can get habitual that how you have to use these things in the examination. First 5,000 pounds is 0%. Then above that, the rate is 15%. But there is employer allowance of 10,500 pounds. I hope you all remember. Okay. So 40,000 pounds minus 5,000 pounds, which is the 0% band. Okay. On 35,000 pounds, the rate is 15%. So that gives me how much class 1 employer NIC? This is 5250. But this will be covered by 10,500 of employer allowance. Because this is the only employee. Okay, the first employee has been hired. So obviously entire employer allowance of 10,500 pounds will be available. So the class 1 employer NIC will simply fall to 0 pounds. I will repeat it again. Trading profit before hiring Sam is 120. Salary is 40,000. Class 1 employer NIC will arise 15%, but that will be covered by the employer allowance of 10,500 pounds. So the revised trading profit will be 80,000 pounds. Are you getting my point? Now, there is no other income in the question. So then we will deduct personal allowance. Okay. As there is no other income of Regi, therefore trading profit will be considered as total income and personal allowance will be deducted from it because there is no other income. This gives me the taxable income of Regi 80,000 minus 12570. So that is 67,430 pounds. Now let's calculate income tax. Let's calculate income tax. On first 37,700, it's 20%. See, I will repeat the things again, but it's very important that you listen to the things carefully first. And then 67,430 minus 37,700 pounds. 67,430 minus 37,700. So it's 29,730 into 40%. So that gives me 11,892. 11,892. So this is total income tax. 19,432. See, if I will hire, listen to my words carefully. If I will hire Sam as an employee, revised tax if Sam is hired as an employee. So obviously my trading profit will get revised. And when my trading profit will get revised, my income tax will get revised. Okay. Trading profit before hiring Sam was 120. It was given in the question. Salary of Sam 40,000 pounds. Class 1 employer NIC will be waived off due to employer allowance of 10,500 pounds. Revised trading profit, you got the taxable income, you did the income tax. I believe like it's easy if someone is alert in his work. So this will be the revised income tax arising. See, I am given with the total tax before hiring Sam. I will calculate everything if we hire Sam and we'll see that if any tax is reducing or not. What about class 4 NIC? Working 2. Let's look at it. See, it's very important. Class 4 NIC will arise on revised trading profit of £80,000. Okay. Now, what are the rates of class 4 NIC? Again, you go to the tax table. On first 12,570, it's 0. Then 12,571 to 50,270, it's 6%. And above that, the rate is 2%. See, you need to know how you have to use the tax tables. Okay. So now let's calculate the class 4 NIC. On 12570, it's 0%, so it gives me 0. Then 50270 minus 12570. On this 37,700, the rate of class 4 NIC is 6%. Okay. I'm just following the rates. So how much will be the amount on it? So that gives me 37,700 into 6%, 2262. And on remaining £80,000 minus 50270. 50270. So that is 29730. 2%. So that is my revised class 4 NIC. Okay. So total class 4 NIC will be 2262 plus 595. So 2857. Here you go. I am putting up the values here. 2857. Okay. How much is my class 1 employer NIC? I just did the working. You can just refer that, or you can write it. Working 3. Class 1 employer NIC on salary paid to Sam of £40,000. Paid to Sam of £40,000. Will be how much? 40,000 minus 5,000 is 0% band. On 35,000, you apply rate of 15%. That gives class 1 employer NIC of 5250, but that is covered in the employer allowance of £10,500, and it's given in the tax table also. Done. So the class 1 employer NIC is £0. But now, when the salary will be paid to Sam, automatically income tax will arise on Sam also. And Sam will also have to pay class 1 employee NIC. So what will be the income tax on Sam? Working 4. Income tax on Sam will arise due to salary of £40,000. Now how much will be that income tax? Let's look at that. Okay. Salary of Sam 40,000. No other income is given. So that will be considered as the total income. Okay. As Sam has no other income, therefore salary of 40,000 will be considered as the total income. See, it's just about solving the question in a simple manner. It's just routine steps if you just look at it. I'm not doing anything technical. But still, if you have any query, you can always ask me on my WhatsApp number, you all know. So 40,000 minus 12570, it's 27430. Okay. Now the income tax will be on 27430. The rate of tax will be 20% as it is within the basic rate band of 37,700. So that gives me 5486. Okay. So here you go. 5486 will be the income tax arising on Sam, because now Sam will be receiving the SAM. Along with that, obviously, class 1 employee NIC will arise. Class 1 employee NIC will arise on salary paid of £40,000. Now, what is the class 1 employee NIC rate? Simply go to the tax tables. On first 12570, it's 0%. Then till 50270, the rate is 8%. Fair enough. 12570 into 0%, that gives me £0. And my salary is 40,000 minus 12570. So it will be 27430 into 8%. So that gives me 2194. Okay, so here you go. You put your class 1 employee NIC on SAM 2194, and then you will get that how much the tax is reducing if we hire Sam as an employee. See, my original tax was 43089 minus 19432 revised income tax minus 2857 revised class 4 NIC minus 5486 revised income tax on SAM and class 1 employee NIC 2194. So the tax will reduce by how much? It will reduce by 13120. Sir, will you repeat the things again? Yes, I will repeat. Okay, let's look at it. I want you all to listen to me carefully. So what we discussed, how much the tax will be saved if Regi employs Sam. So what was the total tax before hiring Sam? The total tax of the couple was 43089. Because see, before hiring Sam, Sam was unemployed and Regi was the only person earning 120,000 pounds. So the total tax situation was 43089 and that was given in the question. Now what will be the revised taxation? Income tax will revise, class 4 NIC will revise, class 1 employer NIC will revise because you are hiring an employee, income tax on SAM will arise and class 1 employee NIC on SAM will arise. Okay. See, when I talk about the questions like these, the problem is not the technical working involved in it. The problem is that how I have to present the data. And that is where students make mistake. And only way to understand and learn this is to practice more and more complete exam papers, because then only will understand that how you have to deal in the examination. Because see, it's all about dealing with the scenario. Total tax, income tax, class 4 NIC, class 1 employer NIC, then income tax on SAM, class 1 employee NIC. The working goes in this way. Now, a more interesting thing will come if you look at it. Another situation is that if Regi and Sam form a partnership, then what will happen? If Regi and Sam will form a partnership, now I want you all to listen to me very carefully, because this part can be done directly. Listen to me very carefully. See, if Regi and Sam form a partnership, then in that case, there won't be any allowed expense of paying the salary, which means that the trading profit of the business will remain at 120,000 pounds. It will just be divided in ratio of 2/3 and 1/3. See, it can be done directly, or you can do, like I would say, labor work of like solving it in much detail. Listen to my words carefully, and this all can only be learned by practicing past paper. Don't think that, okay, sir, I'm weak at rules, that's why I can't do it. No, it has nothing to do with the rules. It is completely related to practicing complete exam papers. Listen to it. If Regi will engage Sam as a partner in business, then trading profits will remain at original level of 120,000 pounds. Why? Because in that case, there won't be any allowed expense adjustment. Because in that case, we are not paying any salary. Okay. Regi's share in profit will be 120,000 into 2/3, which will be 80,000 pounds. Okay. Now, what will be the income tax for Regi? Here it's very important that you listen to me very carefully. See, when Regi was paying salary to Sam, in that case also, Regi's trading profit was 80,000 because 120,000 was the total business profit. 40,000 was paid to Sam. So the trading profit coming in share of Regi was 80,000. In this case of engaging Sam as a partner, in this case also Regi's share is 80,000 pounds still. Okay. Now this is very important that a student can be, I would say, smart in this situation. Income tax of Regi will be how much? This will be the same income tax of 19,432 pounds. Why? Because for Regi, still 80,000 of the trading profit will be subject to tax. Use your mind logically, because otherwise the student will do the entire calculation again. Like he will say, okay, Regi's share in trading profit 80,000 less personal allowance taxable income. And then he will do the same income tax working. So income tax of Regi will be 19,432 pounds. Class 4 NIC for Regi will be, because his share of profit is 80,000. And on 80,000, we have calculated class 4 NIC, and that class 4 NIC was 2857. See, when we talk about partnership, what happens is that each partner is given his share of profit, and then he has to pay his own income tax and class 4 NIC. So Regi's income tax will still be on the profit of 80,000, because earlier 120 was the profit, 40,000 was the salary paid. So the trading profit was 80. And in case of partnership also, Regi's share is still 80,000. So income tax is 19,432 and class 4 NIC is 2857. Will be 2857. There will be no class 1 employer NIC because there is no employee hired. For Sam, share of profit will be how much? 120,000 into 1 over 3, because Sam is getting 1/3 share. So that will be 40,000 pounds. Income tax on it will be how much? Just use your mind. See, instead of employment income, Sam will now get a trading income of 40,000. Employment income is also non-saving income and trading income is also non-saving income. Both of them are non-saving income if you think logically. Both of them are non-saving income. So the income tax will remain same. Income tax on it will be 5,486 pounds. So if you solve it in a logical manner, this question is much easier, because otherwise you would be doing the same workings again. Okay. Instead of class 1 employee NIC, Sam will have to pay class 4 NIC on her share of profit. Class 4 NIC will be how much? Class 4 NIC will be 40,000 pounds minus 12,570 pounds, because that is the 0% band. Because that is the 0% band. 40,000 pounds minus 12,570 pounds. And on the remaining, what is the rate of class 4 NIC? That is 6%. So that will be 6% class 4 NIC. So instead of 8% class 1 employee NIC, Regi will have to pay class 4 NIC. Sir, will you repeat the things again? Yes, I will repeat it, but it's equally important that you listen to the things carefully. So this will bring 1646. Okay. Overall tax reduction in this situation will be how much? So if you look at it carefully, what I will do is I will copy paste the same table. I will copy paste the same table and I will do slight editing in it. Okay. Income tax of Regi, this will remain same 19432. Class 4 NIC of Regi will remain same. This time there won't be any class 1 employer NIC. Income tax of Sam will remain same. Instead of class 1 employee NIC, Sam will have to pay class 4 NIC on Sam. And this time we are not hiring him as an employee, we are hiring him as a partner. Okay, total tax before hiring Sam was 43089. Revised tax if Sam is hired as a partner. Income tax of Regi and class 4 NIC remains same. Income tax on Sam and class 4 NIC on Sam we just calculated it. So what will be the reduction in tax in this scenario? 43089. Okay, sorry, this is 1646. Let me revise it. 1646. So 43089 minus 19432 minus 2857 minus 5486 minus 1646. So this is 13668. Sir, will you repeat the things? Yes, I will repeat the things. I will repeat it. The pound sign need to be copied again. 13668. See, if you look at this answer, it was more about uh, analyzing the requirement. It was more an analysis requirement rather than a taxation requirement. Schedule regarding Regi involving Sam in the business. What will be the overall tax saving? If we employ Sam, okay, our total tax before engaging Sam was 43089. But if we engage Sam as an employee, our trading profit will reduce, and so the income tax and class 4 NIC. On Sam also, on salary, income tax and class 1 employee NIC will arise. Because we have to think about the couple as a whole. That's why we are merging them. So total reduction in this case was 13120. Okay. But now if we engage Sam as a partner, then what will happen? In that case, the trading profit will remain at the original level. The trading profit will remain at the original level. When trading profit will remain at the original level, 120,000 pounds, this trading profit will be divided in ratio of 2:3 and 1:3. For Regi, still his income stands at 80,000. Same tax and class 4 NIC will remain intact for Regi. For Sam, instead of employment income, it is trading income. Both are non-saving, so tax remains same. Instead of class 1 employee NIC, Sam will have to pay class 4 NIC. Okay. So I believe that if you look at the things carefully, it's easier to understand and analyze. But obviously, it's important that you follow the approach, you look at the things, you analyze them carefully. And as I said, in order to understand these things, it's very important that you practice complete exam papers. So overall tax saving, we have to calculate overall tax saving. Calculate the overall saving for couple, Regi and Sam in the tax year 26-27 in each of the following circumstances. So we have calculated that reduction in total taxation. I hope that you guys are getting it. But see, always I say, if you have any query, this is my direct WhatsApp number. You can always WhatsApp me and ask. Okay, and obviously those who are listening to past paper discussions for the first time, for them it would be a bit difficult. But when you will watch my entire series of 7 to 8 complete exam papers, you will gain a lot of confidence. And obviously looking at complete exam papers is like, I would say, a awakening tool which makes you alert that, okay, where I am going. Okay. Now let's look at second part, part 2. Effect on Regi's tax on payment on account. How payment on account, that installment thing will be impacted. So let's look at this requirement, part 2. Now, just a second and then we'll read that what he's asking from us. Now he's saying that explain the effect of involving Sam in the business on the tax payments on account which Regi will be required to make for the tax year 26-27. See, now this is very important. Listen to me carefully. When we talk about the payment on account concept, that individuals have to pay income tax in 3 installments. Okay, like we paid 31st of January during the tax year, then 30th of June, and then 30th of January we pay the final settlement. Okay, if you remember the payment of account concept. Okay, if you don't remember, you just go and search in the summary notes payment on account, POA. The first installment is on 31st of January during the tax year. Then second installment is of 31st of July. And then last installment is 31st of January of the next tax year, which lies in the next tax year. Now first 2 installments are 50% of the previous year. Now here what you need to understand, please listen to me carefully. See, since we will be engaging Sam for the first time, in the tax year 26-27. So Regi's payment of account in 26-27 won't be impacted because it will be based on the previous year. Previous year means 25-26. Because see, payment on account is based on the previous year tax amounts. Okay. But if it is first year of pay, or if there is a major change in profile of the business or major change in profitability, then in that case we can request tax department to follow budgets. But in a normal situation, the payment on account of Regi for 26-27 won't be impacted. Listen to me carefully. Payment on account of Regi for 2026-27 will not take impact of hiring Sam as in, or I would say as POA of 2026-27 will be based on previous year, which will be 25-26, in which Sam was not in the business. However, it is possible that Regi can apply to tax department to base its POA, payment on account, on current year budgeted profits rather than previous year profit amounts. Okay, or rather than previous year tax amounts. I will repeat it again. See, normally payment on account, how it works. The POA of 26-27 will be based on previous year income tax in class 4 NIC. We take 50% of the previous year income tax in class 4 NIC and we pay that. 31st of January during the tax year, 31st of July after the end of tax year, and then 31st of January after the tax year. Like if I talk about 26-27, it's 31st January 27, then 31st July 2027, and then 31st of January 2028. So payment on account, the first two installments are based on previous year tax. So in previous year, Sam was not part of the business. Sam was engaged in 26-27. So 26-27 itself, POA will not take impact because POA will be based on previous year, the first two installments. But if Regi applies to the tax department that it want to base the POA on the basis of budgeted profit, then yes, it can take impact. And yes, the request of budgeted profit can be done if there is major change in profit, and engaging Sam will impact the profit by 1/3. So it was just a 2 marks requirement. There was no calculation required. Now let's move towards part C, which is the last part, in which part 1 is about ethics and part 2 is about corporate tax. Last 11 marks. Let's read it. Okay. See, it's very important that while doing the past papers, you concentrate on the things, and obviously, as I said, studying all the topics, doing topical practice is a completely different phase. Whereas practicing complete exam papers gives you a complete different insight. Let's read exhibit number 3. Topul Limited Corporate Tax Matters. Extract from an email from Lee, Finance Director of Topul Limited, dated 1st March 2026. I am pleased that your client Sylvie introduced us because I would like your firm to do same work for Topul Limited. As you know, Topul Limited is a UK resident trading company owned by 3 individuals, including Sylvie. Topul Limited has an accounting reference date of 30th September. If you remember, Topul Limited, 4,000 shares were held by Sylvie, 2,000 shares were held by Terry. So 60% was in the Sylvie and her husband. And then Sylvie's brother owns remaining 4,000 shares. So now the situation is that Topul Limited want that we provide them also the services. Okay. Vents company. Specifically, I would like to engage your firm to advise on corporate tax matters relating to Vents company, a company resident in the country of Zetopia. Topul Limited bought 30% of the shares of Vents company on 1st November 25. receives dividend from Vents company on 1st February 2016. I'm reading the scenario and then we'll see what he's asking. Topul Limited expects to receive dividend from Vents company each year. Topul Limited does not own shares in any other company. So we have 30% shares in this foreign company, which is in Zetopia, and we are receiving dividends from it. The other shareholders of Vents company are a company resident in Zetopia, 10% shareholding, and a UK resident individual having 60% shareholding. Now, this UK resident individual owns 60% and we own 30%. So I can say that this Vents company is a controlled foreign company. It is CFC. Any non-resident company controlled by UK resident shareholders is called as CFC. I have concluded that Vents company is not a CFC. You are wrong. I have concluded, you have wrongly concluded. Because Topul Limited does not own 75% shares, it's wrong. For controlled foreign company, it's not 75% shareholding, it's control 50% plus shares. If you don't remember, just go to the notes, write controlled foreign company CFC. An overseas company controlled by UK resident shareholders, 50% plus shares. Individual or company, anyone. So his conclusion is wrong. This is skepticism, challenging where they have done wrong. Timing of corporate tax payment. I am concerned that Topul Limited investment in Vents company and future receipt of dividend income might affect the timing of the payment of corporate tax liability and that a payment might be due soon. Topul Limited annual taxable profits have always been below 1.5 million, and so the company has not previously had to pay corporate tax by quarterly installment. See, if we are receiving dividend income, that increases our augmented profit. And if it increases augmented profit so much that it exceeds this limit of 1.5 million, then we have to go for the installment concept. Okay, if you remember the corporate tax payment concept, again, if you don't remember, just go to the summary notes. Okay, and you can find these things: payment, corporate tax payment things. Okay, installment, corporate tax installments. If you just move down here, oh, this is CGT, corporate tax installment. Okay, so normally companies have to pay tax within 9 months, but if augmented profit exceed the upper limit, then corporate tax has to be paid in installment. Upper limit is 1.5 million. It will be provided in the tax rate sheet. The installment concept. Okay, all the things. So, but if it is the first year the company become eligible for installment and its augmented profit is less than 10 million, then there is a waiver option also in the first year. So he has said that we have not paid corporate tax by installment any time earlier. So even though if we exceed the limit, but in the first year, we may have an exemption because obviously crossing 1.5 million and then crossing 10 million also, that's a very big profit. So let's see what he's asking. Prepare an internal memorandum for me before I respond to Lee, covering the matters below. Fundamental principles. Before our firm agrees to act for Topul Limited, we should consider the ACCA's fundamental principles of ethics. Explain any difficulties we may have complying with the ACCA fundamental principles of ethics in relation to acting for Topul Limited. So we are considering accepting a new client and we have a requirement relating to ethics. Okay, we have a requirement relating to ethics. So if you remember in the classes, we have discussed the ethics things. Okay, let me open that document of ethics, just a second. We have studied it during our classes. So if you look at this requirement of ethics, so whenever we are engaging or accepting a new client, okay, what fundamental principle of ethics we have to consider? If you remember how I taught this document, I taught you the routine requirements which examiner asks normally. Then I also taught you the important concept so that your topic gets covered. So within this only, factors to consider before accepting tax engagement of any client. So what he's asking, explain any difficulties we may have faced. So like, okay, Topul Limited is our new client, but we already provide services to its shareholders, Sylvie. If I'm providing the services to the shareholder and the company, both of them, so maybe there are conflict of interest situations. Maybe there can be problems of confidentiality. Okay. So one is that we ask about the documents and all. But here the question is that we have to think about factors we have to consider. Okay. So we can consider about conflict of interest thing. We can think about availability of resources, that whether we are accepting a new client, so whether we have resources or not. We can think about confidentiality, or we can also think about integrity of the client. Okay. So a simple requirement relating to ethics, and then another requirement relating to UK corporate taxes. So whenever I talk about the requirement of ethics, if you have covered my document, it's always very easy to do it. Okay. So let's look at it. We have to prepare a memorandum. Internal memorandum we are preparing. Same basic format. 2 client files. Same format. From text supervisor, we made it earlier also. Date. What is the date? Don't write the date of today of the examination. Write the date which is given in the scenario. So the date which is at which the manager sent you email was 1st March 26. Client here is Topul Limited. Okay. And what is the subject? Corporate tax matters of Topul Limited. Okay. Now the first requirement which he has asked in it is relating to fundamental principles of ethics. So here we go. An easy 5 marks requirement. Okay. Whenever we have a requirement relating to ethics, I always say that it's a very easy score which you can gain. Okay. So now let's start drafting it. An easy one. So before our firm agrees to act for Topul Limited, we should consider the ACCA's fundamental principles of ethics. Okay. So what difficulties we may have complying with ACCA fundamental principles. So as I referred you in the ethics, you can refer these factors to consider before accepting. Okay. And also the fundamental principles of ethics that we have also covered. So basically you can refer each of the fundamental principle, and then you can relate it to the scenario also, that how it will create difficulty. So this fundamental principle concept, these factors to consider, and you can use it to develop a good answer. Okay. So if we talk about fundamental principles, okay, if we think about integrity, it's a new client, Topul Limited, so we need to think about the integrity of the directors and all. Okay. Objectivity, that we can relate to conflict of interest. Okay. So let's write first point on objectivity. Okay. Objectivity issue or objectivity principle need to be considered before accepting Topul Limited as a client, as our firm already provides services to shareholders of Topul Limited. Okay. Situations of conflict of interest may arise where an advice to its shareholders may not be good for company as a whole. Okay. Our firm has to ensure that objective services, or I would say neutral services, are provided to both of them. Now, what do you mean by this? See, there are situations from tax perspective. When giving something to a shareholder in a manner, it may result in a lower cost for shareholder, but higher cost for the company. Think about it. Because, okay, maybe the company has to think about corporate tax implication, and shareholder has to think about like, okay, what income tax personally I have to pay. Okay, so there can be situation of conflict of interest. Integrity needs to be considered of Topul Limited and its directors, as it is a new client. Okay, past non-compliances, if any exist, may be relevant to consider an integrity issue. Okay, further, clearance from previous advisor will also be essential. So this is what we consider while we accept a client. Okay, the ethical issues. Or if you just go and look at my ethics notes. So if we are thinking about new client, we need to consider that, okay, whether we need to accept it or not, we contact their existing provider. Are you getting it? We think about conflict of interest, we think about availability of resources, we think about competence. Okay, professional competence and due care need to be considered. That whether our firm has sufficient resources to deal with Topul Limited as a client. Additionally, as Topul Limited has overseas investment also, so it need to be considered that whether our firm has expertise of Zipotia tax or not. Okay, like we'll be able to consider the taxation of that country or not, because maybe Zipotian tax will have some impact on Topul Limited taxation. So what factors we need to consider before accepting Topul Limited? That's the simple requirement. And since we have to relate it to the fundamental principles, so we are referring that fundamental principles also. Confidentiality needs to be considered while accepting Topul Limited as a client, that no confidential information of shareholder of Topul Limited or Topul Limited itself get exchanged or shared between the company and the shareholders, because maybe the shareholder is willing to know that, okay, what company will be doing in future, how it will impact our taxation, because Sylvia uses our firm and Sylvia is only 40% shares, others still have 60% shares. So maybe Sylvia uses us, to get unethical things done or to get some excess of the information. Are you getting it? So the fundamental principles of ethics, and how we have to connect them to the acceptance of Topul Limited. Are you getting it? But we won't be writing this point. We write it normally like proof of identity and all, because he didn't ask us for actions to be taken. He simply asked us that what difficulties we may face. Okay. And then you can say professional behavior will also be considered, because we'll be dealing with Sylvia as a shareholder and we'll be dealing with Topul Limited also. We have to ensure that we don't involve ourselves in any action which can discredit the profession. Okay. Professional behavior also needs to be considered. While our firm provides service to Sylvia as shareholder of Topul Limited and Topul Limited itself as a client. Okay, our firm has to ensure that no such actions are done which may discredit the profession. So the fundamental principles of ethics and what we need to consider before accepting the client. If you didn't have related it to fundamental principles, then you would have simply used these pointers also. And also you would have gained 5 marks. So I always say that when you talk about the requirement of ethics, it is just learning these 2 pages. Every time the requirement will be from these. And I've conducted a proper complete lecture on it during the classes, you all know. 5 marks mandatory in the examination. Done? Now comes the last 6 marks requirement. Let's look at it. UK corporate tax issues relating to Vents company. So let's look at it. See, when you do these past paper discussion sessions, you get a real, I would say, an awakening call. You get alert that, okay, this is how what will happen in my actual examination. And normally when the students watch the first past paper, they say, okay, it's difficult for us. But believe me, it's just first paper. You will do 6, 7 papers with me, you will have a great confidence. Okay. So let's read this. I can confirm that Vents company is a non-resident company. Explain whether or not Lee is correct to conclude that Vents company is not a controlled foreign company. First of all, we have to talk about determination of CFC. First of all, we have to talk about determination of controlled foreign company. So simple. Lee is wrong in concluding that Vents company is not a controlled foreign company. He is wrong. Okay. Vents company is a controlled foreign company. As Vents company is a non-UK resident company and it is controlled by UK resident shareholders. Okay. Control means 50% plus shareholding. Okay. Lee assumption of 75% shareholding is wrong. Vents companies 30% shares are owned by Topul Limited, which is a UK resident shareholder, and I think 60% shares, and 60% shares are owned by another individual, by a UK resident individual. So that makes Vents company a CFC, and 60% shares are owned by a UK resident shareholder. This means 90% shares are owned by UK resident shareholders, which makes Vents company a controlled foreign company, as a non-UK resident company is controlled by UK resident shareholders. So Lee is wrong. Okay. Vents company is a controlled foreign because 50% plus shares are owned by UK resident shareholders. So first of all, explain whether or not Lee is correct to conclude. No, he is wrong. Then explain whether Topul Limited investment in Vents company shares could affect whether Topul Limited would be required to pay quarterly installment of corporate tax for the year ended 30th September 26 and for the year ended 30th September 27. You should identify any further information required to determine this. You should ignore any CFC rules. So, if you remember, Topul Limited will receive dividends from Vents company. See, it was written in the scenario. Will receive dividends on 1st February 26. So when we receive dividend and our shareholding is 30%, which means that company is not a group company. So that dividend become part of augmented profit. Okay. So here basically the first part is done. Now we are writing about impact on corporate tax payment dates. Topul Limited will receive dividends, or I would say has received dividends. Received, okay. Topul Limited has received dividends. Has received dividends from Vents Company in year ended 30th September 2026 and will also receive more in next year also, which will be 30th September 27. Sir, please repeat it. See, we are talking about the year end of 30th September. The question says that we receive dividends on 1st February 26 and we expect to receive dividend each year. Okay. Now, as shareholding in Topul in Vents company is less than 50%, therefore dividends received will become part of augmented profit of Topul Limited. If augmented profit exceeds upper limit of 1.5 million pounds, let me copy the pound sign. Will exceed upper limit of 1.5 million pounds, then in that case, Topul Limited will have to pay corporate tax under installment concept. Okay. However, as Topul Limited has not paid corporate tax under installment concept before 30th September 2026. Therefore, even if it exceeds upper limit in 30th September 26, it may get waiver from installment concept if its augmented profit remains below 10 million pounds. See, you have studied all of this in classes. You can simply use the summary notes. So when your profit exceeds the upper limit, 1.5 million and everything. Okay. When you are receiving the dividends, those dividends from unconnected company become part of augmented profit. You have studied all of this. In the first year, when you become eligible for installment, you get a waiver if your profit is below 10 million and all. Okay. So most probably in the first year, you get a waiver. However, this waiver will not be available in tax year 30th September 27 if Topul Limited exceeds upper limit in that year also. Okay. So first of all, how receiving dividend can impact our corporate tax payment. What further information we require? See, currently we simply don't know that how much dividend is coming. We don't know that. We don't know what is Topul Limited's profit. Maybe 10,000 dividend is coming and our profit is only 50,000. So we are far below the limit. Further information required includes existing taxable profits of Topul Limited of 30th September 2026 and 30th September 2027. Additionally, information about dividend received in February 2026 and expected dividends to be received in future also need to be known. This will help in determining the value of augmented profits. Because, okay, You just told me to make commentary, so I commented that okay, maybe the dividends are big enough that my augmented profit exceed the upper limit, but how much is the dividend? How much is the taxable income? Tell me that. So if you look at this question, I would say that it was a bit difficult as compared to normal questions which come at ATX level, but not one in which you won't be able to get a passing mark. But by the way, in this exam, only one of our student got 94 marks. We got positions in Nepal, we got positions in Pakistan, we got positions in Mauritius. So like students score great marks. So if you look at this question as a whole, first requirement was in relation to gift holdover relief and BPR. Then tax implication, CGT and IST implication of gifting a car or gifting of shares. I try to explain in as much detail as I can go. I know that it takes some extra time, but obviously my objective is to explain in as much detail as I can. Then hiring an individual as an employee, or if we hire that individual as a partner. So we discussed about the tax implications, we discussed it in detail. Obviously, the session is recorded, so you can watch it again. Then ethics, and then this requirement of control for income. So this is just a start of this series, and today we just discussed question number 1. This will go long, and we'll be looking at question 2, 3 of this June 26 paper, and then a lot of more complete exam paper sessions. Once you watch them, then comes 3 mock exams and then checking and all. That's a complete package, which result in so many positions of my students. So hope to see you all in the next class when we'll be looking at question number 2 and 3. By the way, if you have any query or you want to connect with me, you can always connect with me on via WhatsApp. Okay? Thank you, everyone.